Hey, everybody, welcome to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com. We've been in business every market day since October of 2002, if you can believe it, coming up on our 23rd anniversary. And if you want to join me in a brilliant group of amazing people in a live trading room where I trade every day, I share everything that I'm buying and selling. You get the ticker symbol, entry price, stop price, target price, and my reasons for the trade, plus a whole lot of great discussion about the market throughout the day and a lot of great people to hang out with. Go to drstoxx.com, click the subscribe menu. Where's my cursor? There it is. Click the subscribe menu, scroll down to live trading room. We're coming to you from the live trading room today. And if you want to add on the live options room, which is a newer service of mine, you can do that at a 40% discount. Okay, let's take a quick look at the indexes today. Now, I was just pointing out to members of our room that we've got a discrepancy here between the futures contracts. These are the micro E-mini futures for the Dow, the NASDAQ MNQ, the S&P, and the Russell 2000. And you can see that the three majors are green today. But then if we go down to the DIA for the Dow, the SPY for the S&P 500, QQQ for the NASDAQ 100, you can see that they're red. Not big red, but small red. And there are some explanations for why that would be the case. It's possible that TradingView, this is the charting service I'm using, rolled out to the next month contract. Those values are higher than this current month because of the time value, and that's reflected there in the green. It could also be a fair value kind of thing. So futures trade not at a notional price, but at a fair value price relative to the fair value of the underlying index. And sometimes it takes a little while for that to get caught up. Anyway, I don't understand the difference there, but we will focus on the ETFs. So let's take a look at the daily chart. We'll start with the SPY. So we are clearly in a very strong uptrend, and it is a very nice looking uptrend. And there's absolutely nothing, I say nothing, I'll repeat, nothing in this chart that leads me to believe that we are in any imminent danger of a major pullback. Now you can see that today's red candlestick is showing what I call a gap and crap kind of move. So it gaps up above the high of yesterday, and then it just trends down pretty much all day long. That's kind of where we're at. It is a Tuesday. We had a really nice day Monday yesterday. It was a gap and go yesterday. It's a gap and crap today. And all of that is the market's way of pricing in what's going to happen tomorrow. Tomorrow, Wednesday, Fed is meeting for the first time in a month or 2 months. I forget when the last meeting was. And everybody and their mother knows that they're going to cut 25 basis points. But the real thing the market's going to be watching is the Fed ready to cut more soon? Like even at the next meeting, are they willing to cut another 25 basis points? Do they recognize that the jobs market is not what it used to be after a huge revision down just a few days ago, and after a couple of months of missing expectations on the new jobs created number and seeing our unemployment rate tick just a little bit higher each time? Are they willing to kind of lay aside their need to get down to 2% CPI and focus instead on boosting the economy a bit so that jobs start coming back in line? If the Fed says yes to that question, then we should see the market do pretty well from that point on, tomorrow afternoon on. If the answer is no to that question, and the Fed starts talking about uncertainty regarding tariffs, which is kind of their watchword every time they've been out, we are data dependent, and we'll need to see more data before we can commit to any further rate cuts. Or if they say something like inflation is sticky and we're really concerned about it, and those kinds of voicings could lead us to a pretty major sell-off tomorrow. So we really have to be careful. I think our best position is going into tomorrow afternoon on the lighter side of things, not being too heavy. But there's nothing in this chart that suggests to me that we need to put on hedge positions or start shorting or go all to cash. There's nothing here at all that suggests that. Yeah, we'll get some volatility. Yeah, we can expect a little bit of choppiness, maybe a lot of choppiness in and around every word that Jay Powell says, especially during the press conference, because that's where he's speaking more or less off the cuff, and where things, the press is trying to lure out of him what he really thinks, and sometimes the market's not real happy with what he really thinks. But anyway, we'll deal with it when we get there, and we've got stops in place. So, and most everything that we've been in up until today, it's been a little bit rougher today, but mostly we've been doing pretty well. Both rooms, I'm happy to say, just hit new all-time highs this week, right? Yesterday on a closed trade basis, we have hit all-time highs, and the options room, which was in a little bit of a drawdown for about 3 weeks, also hit a new all-time high this morning when we closed out a very nice winning trade. Okay, so S&P 500, it looks a little toppy, I have to say, but you can correct or discount the uncertainty in the market, not always by going down, but by going sideways, right? Just a nice, tight, choppy little trading range, and maybe we can carve that out. I suppose that today's high probably would be the top of that range, and then we can kind of come down in here for a couple of closes in line with each other for the bottom of the range, and maybe for a couple of days we tighten up the base of our S&P within those two levels of support and resistance. Now let's take a look at the NASDAQ. It's going to be similar story. It was not quite as strong. It did have a little more work to do to get above this 52-week high to get back to new all-time highs for the index, but it did that last week and got, like everything yesterday, got a nice gap and go. And today is a gap and crap, but it's not a real big gap and crap, right? We're still staying, if I can focus in here, we are still staying well within the first fourth or fifth of that candlestick today, staying up near the highs. Good, right? All good. Okay, again, sideways correction might simply be a trading range, and I would suspect that today's high would be the top of the range, and that previous pivot high right there would probably be the bottom of the range. And I could see us printing a 1 to 1.5% trading range over a week or two in response to the Fed, and maybe a little bit of disappointment that, they're not just going to slash 50 basis points every time they meet, especially given the big revision in jobs numbers. So I could see a little 1 to 2% trading range forming here through the rest of the month, and then October is slated seasonally, usually is pretty strong, slated to be a pretty good month. I'm not going to say much about the small caps other than to say that it's already printing a trading range, which the high was set last week, not yesterday, but not this morning, but last week, and you can see a pretty good range of support lows right there. So we are in that trading range already. It's a 1.5% trading range. We tested the lows of that this morning when the small cap index turned out to be much weaker than the others. Still weaker, but it has rallied much better off the lows of today. So that's good to see. And I've been saying to my clients who are interested in buying the Russell and to members of my trading room that I think Russell will have a very good Q4, but we're not there yet, and I don't think we have seen we haven't really seen the weakness in the Russell 2000 play out just yet. So let's wait and see. It's not a no-go zone for me, but it's a hold at best. It's not a new buy. Okay, now that's all I wanted to say about the indexes, because I could get really bogged down in a few other things. But keep an eye on Ether. So we just had an interesting note out from Tom Lee and his group Fund Strat, I think it's called. He has a technical analyst that works for him. What is his name? Mark Newton, who is, I would have to say he's pretty good. There are times when I disagree with his analysis, and half of those times I'm right, half of the times he's right. And And there are times too when I agree with this analysis, but it turns out both of us are wrong. And that's just, that's just part of trading. But he just came out this morning with a new analysis of Ether, saying that the weakness is just about all priced in, right? All this consolidation move here. We had a little bit of a rounded bottom. We broke out of that pullback. Had a big, really nice looking green stick last Friday, closed last week, and everybody and their mother was buying Ether, and should be, right? Should be. But a couple of days of what do we call it? A back and fill, a little bit of back and fill off of that big green stick. Here's a good example why you don't buy a big green stick. Here's another good example. Don't buy a big green stick. But now if we look down at the 2-hour chart, we're going to see, there is the 2-hour chart. You're going to see a new uptrend, right? Here's that rounded bottom out of the wedge, new uptrend, a Fibonacci retracement, probably down to the 618, testing the pink zone of the 2-hour LRC, and a nice bounce up and out of it. I think we are starting to see in Ether, we're starting to see some good constructive activity taking place. And I would, we're long, I'm forgetting what we had. We've had positions on Ether in both rooms as late as last week, but I think we moved up stops. I'm forgetting exactly. I think in the live trading room, we took a profit. And in the live options room, we took a small loss because I moved the stop up and be a little bit too tight, and it got stopped out this morning on that flush right there. But I'll say this as a trading tip, by the way. I would rather take, and it was a very small loss, by the way, in our options play. I would rather take 3 or 4 small losses in a position that I really like, that I really think is going to do well. I would rather take 3 or 4 small losses with a tight stop and then get in even at a higher price than I got out of. I would rather get in at a higher price and then see the win evolve than continue to buy shares lower and lower and lower. You don't want to do that. That's one of the worst things you can do as a trader. You have to develop the mindset that small losses are good and buying higher is also good. Right? Why is it good? I thought you're supposed to buy low and sell higher. No. And sometimes we do that, of course, when you can get a good pullback to a very clear level of support. But get into the mindset. If you keep going after a trade and you still like it, you still like the setup, but you keep getting knocked out because of your tight stop, don't stop buying that position, but don't buy it until it starts going up again. Don't buy it because, I got out at 30 and now it's at 29. No, buy it at 30 and 50 cents, right? Because it's gone back up, right? It went down to 29, tested that level of support. Now it's bounced back up to $30.45. Buy it there, not down to 29, okay? The more often you buy down to 29, the more often you're going to just get yourself into a whole lot of trouble. All right, Bitcoin, it is green today, and it's doing a little bit better than Ether, but I still don't have that feel for Bitcoin that I think it's got the mojo to break out of what is otherwise the beginnings of perhaps. Let me show you here what I'm talking about. The beginnings perhaps of a more prolonged downtrend. I'm not saying that Bitcoin is just going to crash, but we've got this sequence of lower highs and lower lows, and we saw the same thing 8-9 months ago. Same exact thing. 3 waves of lower highs, lower lows, and then huge breakout to the upside. So I think we've got one more lower leg in Bitcoin, and maybe Bitcoin gets down to about 105, 106. Then when it starts to move back up again, we can get long Bitcoin. Okay, now that I am actually long Bitcoin in my long-term fund. We are long Bitcoin in the live trading room in our long-term position portfolio. So I'm not at all opposed to hanging on to Bitcoin at all. It's not a get out by any means, but I do think that if you're looking to swing trade it, you don't buy this high. Wait until it comes back down again and test the lows. Okay, I want to show you a short list of longs, and then I'm really trying to save time because there's some trading ideas I have for both rooms that I want to follow up on before we get too close to the bell today. So let me show you a few setups that I'm following and keeping an eye on. Let's start with CoreWeave. So we are long CoreWeave in, I think in both rooms. We've got some unofficial calls on in CoreWeave in the options room, and we're still in some shares of CoreWeave in the live trading room. And I really like what's going on here. So CoreWeave had some good news out a few days ago that caused the big gap up. It has held that gap open for the most part. There was a flush out right here to close the gap, and a lot of folks got short there, and that was a mistake because it was right back up again. And now we're banging on a very clearly marked out resistance trend line, RTL, of a falling wedge that will be bullish once we get to the top side of that. We're not there yet, but it is coiling up very nicely underneath. I like the volume. I like the fact that the long-term cycle, this is the purple line there, has come all the way down to the bottom and is starting to curl higher. That's a very good sign. You'll see that when the purple line does that, the longer-term cycle, when it starts to curl higher, that's a good time to start buying, right? Same thing over here. When it starts to curl higher, that's a good time to start buying. So snow. Now here's a good example of kind of what I'm talking about. Snow is not set up well today, but it was set up well yesterday, and it lured me in. I didn't announce this in either room, but I bought a couple of calls on Snow, thinking that this was the breakout move of this pullback. Right here's a big gap up. That's a power gap on earnings. It has not closed at all. It looks like it might close today, but now that the price is back into that gap, but as of yesterday, it was looking really great. So I bought some calls, and I bought them on the top side of this RTL. And then within an hour and a half, I started to see it go down, right? I was losing $20 per call, $40 per call, $80 per call. And I thought, you know what? This is not looking very good. I got out. I took the small loss. And I'm glad I did, because today it was a gap down and continuation lower. So, don't be afraid when you buy something that looks good and then within the same day starts to reverse and go against you, and you're starting to see your loss in that position build up, and you look back at the chart and you think, yeah, it doesn't look like it did a couple hours ago. Don't be afraid to just jump out. And if it goes back up again and it's above where you bought it the first time, but it's 20 minutes to the bell, you can buy it back. Much better that than getting stuck in a position like today where instead of being down $80, I would be down $300 probably. Okay, OSCR is a play on healthcare. It's not quite a buy just yet, but I do like what it is doing here with a pullback to the 21 EMA, and it's a hold today. I don't like the fact that it gapped down on a modestly flat to modestly bearish day, but big gap down there is not so good. OSCR is not one of my favorite stocks for its story or its fundamentals, but I recognize that there is some good value here as a disruptor play in the healthcare space. And so I have it on my list. And I do think that once we close above today's high, that would be a buy signal in my book. GEV is off today, but it's been, it's been a hot stock lately. It is it's a spinoff of GE, right? General Electric, and it's has something to do. I don't know exactly what they do, but something to do with powering up data centers. And I'm just kind of waiting for this to play out. So we had a gap up, right? That was last week. Everything gapped up last week on that day. 4-day pullback into the 21 EMA, the 50-period moving average, and the pink zone of the LRC. That's usually a good place to buy. We've got the long-term cycle curling up. We've got a fresh MACD buy signal. The only thing I don't like technically on this chart is that the volume balance looks a little bit on the bearish side, i.e. people are distributing shares, not accumulating. So it's going to have to show me, I want to see a green candle, I want to see a high volume print, and I want to see a good push away that closes near the highs of the day, away from that 50-period moving average, and we're not there yet. This is not at all set up, but I'm just watching this little pullback in a big Momo play. I don't know anything about. Well, it's a biotech, I guess, but it's also a double top. So you know what? Now that it's still not looking very good, I'm going to take that one off my list. Affirm is a good play on consumer loans. And if rates come down, consumer loans get more attractive. You're going to see people going out and buying refrigerators and motorcycles and things like that, and then financing them through Affirm and other payment plans. And this is the setup right here. This is all-time highs. I'm pretty sure. No, it's not. Okay, 52-week highs in any case. And look at what the stock has been doing. Same pattern there, same pattern there, same pattern there. And each time it got up to that level and broke out, right? Here's a gap up, here's a big green stick breakout, and here's a big gap up. You wouldn't buy that gap, obviously, but it did move higher from there. And now we're banging on that line again. I don't think that line is going to hold very much longer. And I think that given the FOMC tomorrow, we should see this do pretty well over the next couple of weeks for a nice leg higher. Here's an ether play. So we are just kind of waiting for this to play out, right? It's close the gap. All right, that's not a bad thing. Close the gap, bounce off the 21. Tomorrow looks like a good moving day for ether. Shop, rounded bottom. Rounded bottoms are always more bearish than a V bottom, right? Rounded bottoms, especially a shallow one like this, staying mostly above the 21 EMA, pushing off it very nicely yesterday, a little bit of back and fill today. I like shop. I like it. And here's your, I guess your trend line would include the close of yesterday. It did try to break out today, was not successful. Market's not helping. Probably won't get going until we get past the FOMC, but keep on watch for this one. I have a friend, by the way, actually not so much of a friend, but an acquaintance in the business. And he made a gazillion dollars way back when. And he was trading this particular pattern on the 5-minute chart. He would look for strong ups. He wouldn't buy the up. What's going on here? He would not buy the upswing. He would wait for a consolidating pattern. He wouldn't buy the pattern either. He would put a line over the top. And when that pattern broke, that right there is where he got in. And he would just hold. He would set stops. He would never trade to a target. He would always move his stops higher and higher. And he made a lot of money trading the 5-minute chart of that particular pattern. That particular pattern also holds on the daily chart. So that's what we're trying to do. AMD, we've got AMD in both rooms. I may be wrong about that. I think we're only in the live trading room. But we have, I take it back. We have, I think we have AMDL calls. No, we don't. I don't know. I'm totally confused because I've got 2 rooms. I've got 3 daily newsletters, and I've got 2 weekly newsletters, and all kinds of stuff going on. Here's your breakout, a falling wedge breakout. We're having trouble getting up above the 21 EMA. It's not really a viable buy setup today, but we're already long. We bought AMD back, it was like around 115, I think it was, and we're in a long-term position there. So we're just going to hold and wait for 200 on that position. But AMDL is the leveraged version, and I forget which room we're in. I'm sorry, guys, but we're waiting for this to close above the 21, and I think at that point it's going to get some good traction. So I'm interested in coin. Coin has the rounded bottom. Here's your rounded bottom. It has already broken the pullback, right? It happened right there. Right there. It went sideways for a few days, and now it's starting to trend higher. So coin, I think, could be bought today. I actually kind of like this little dip entry that's giving right now. If we go over to the 2-hour chart, you're going to see that down in this area earlier on in the dip, as it started to rise higher, was a good place to get on board. But it might also be that it's now coiling up underneath that resistance trend line. This is on the 2-hour chart, and it's just a matter of time before it breaks and starts running higher. So with coin, if you can get up above about 333, come on, if you can get up above about 333 on the close, which would be the most recent trading range highs that we saw just now on the 2-hour chart, you're going to have a good run to 340 pretty quickly. And then you attack the gap from there up at around 370. So that's coin. I wouldn't go super duper long right now. Let's see how it plays out after the Fed, but keep an eye on it. It's got some really good upside potential. That rounded bottom plus the pullback breakout, both of the fresh MACD buy signal, all of that looks good. SOUN is it is forming a setup. I wouldn't say it's ready to go just yet, but it's close. And I like the fact that it's holding above the 21 period moving average. It's coiling just underneath that resistance trend line. I would rather see a little more upside, a little good volume like we saw back here, a nice green candle like that one right there, or that one would be a good entry in my opinion. LASR is a something play. I forget what the product is, but this is about as bullish as it gets. Here's your power gap. Here's your sideways consolidation. We've been in that high tight base for about 3 weeks. 3 weeks is the minimum for a high tight base. And now we're banging up on the top side of that. And this should spurt quite higher up to about 34. MSTR is a play on Bitcoin. We're just about ready to break this bullback, and we're down here in the pink zone. It's not a great looking chart. There's not a whole lot of technical strength here, but it is MicroStrategy, and it will go higher with Bitcoin. As I just said, Bitcoin probably has a little bit of a leg lower, in which case MSTR is maybe not the best play. But here's how we're playing it in the options room. We've been selling puts on this guy. We've been selling puts. We did get put into shares a couple of weeks ago. We sold calls on that. Then we got called away. Now we're back into puts, I think. Or are we in the calls? Maybe we're in a covered call. Anyway, we're just selling premium on this. Why? A, the premium is really high. And B, it's just been going sideways. And I don't think it's really going to go down too much lower because the valuations of the asset underlying in the company are too strong. So yeah, perfect place to start building out so we've got like $1,000 of premium per contract, which, you know, the stock right now, we're doing this on MSTX, $23. So if we bought shares today, our cost basis for the shares would be about $13.30, right? Not too bad after 5 weeks of selling put and call premium. That's how you do it, my friends. That's how you do it. PRCH is a software play. I like this little soft pullback into the 21 period moving average. Nice little doji today. This is good. This is as bullish as it gets. Bullish, 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 and a good place to enter. Every time it's down to at or near the 21, it bounces up quite nicely. 21, bounce up. 21, bounce up. This one, Hinge, I actually have some shares of this one. I've been talking about it when it was down here at the 21 period moving average in the mid 50s, and it's up at 58 and change. It's not really doing a whole lot. Had a real big exciting breakout day on good volume, and then it was a couple of days of pulling back. So, but the fundamentals here are very good. Analysts love this. They have high target prices, and it's an IPO, and it's in the right space. This is a competitor of OSCR, and I do think that this may actually be a better play in terms of growth potential. Watch OUST. It is just about ready, right? 21 period moving average over the 50, 50 over the 200. Everything's rising, rising, rising. We're above the 21, just coiling up very nicely. Everybody's just waiting for the Fed, waiting for the Fed. When this breaks out to the upside of that RTL, I think you're going to get a very nice looking squeeze move, as we saw right here. That's a squeeze move. That's a squeeze move. That's a squeeze move. Shorts are scrambling, cover, 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 and everybody's trying to buy in to get on board with the momentum. And this has that potential. It's really shaping up nicely for that. NUE is a steel play. I just like this technical setup. The fundamentals here aren't great, but I do think the commodity space, we're talking gas, natural gas, gold, silver. We have silver on in the options room. Gold, silver, and I don't know if we want to put Bitcoin in the asset class, but the material stocks, chemicals, Sherwin-Williams, things like that are good places to be, very good places to be as rates start to come down. It makes the materials that that they have to buy much cheaper, and then they make more money. So this is a good place. Not the best steel company out there, but it's got the best chart. I'll have to say that. All right, guys, I've been talking way too much, and I don't have time to go over to MarketSurge. I'll save that for our next time together. I was going to show you a good scan that you can build in MarketSurge that will always tell you the leading stocks of the market. And very often they're not the ones you think, right? They're not the big mags. They're some stocks you might not have heard of before, but they're banging up on 12 cylinders all across the board in terms of relative strength and accumulation and fundamental growth and accelerating earnings and all that stuff. And when you've got all those things going at once, you are the leader of the market, whether you want to be or not. And so I'll show you real quick, just because once I start talking about it, I can't stop. But this is MarketSurge. And I have a screen, I call it Market Leaders. Very creative name. And if we open up the edit, you're going to see these are the filters that I use to create this screen. You can only do this in MarketSurge because it uses the proprietary metrics of Investors Business Daily, right? And they have a kind of a unique angle on earnings, margins, accelerating revenues and things like that. And then they spit out numbers in each of those categories, and you just put in a minimum number. Like for relative strength, I want a 90, or for EPS, I want an 80, relative strength 95. SMR rating is an A. That's your sales growth, margins, and return on equity. That's what Warren Buffett would call the moat around the pricing power of the company. Accumulation distribution rating. I want an A or B. That means, generally speaking, funds are buying. They're not getting rid of shares. They're adding to their positions. A comp rating of 95, that's kind of the big number that crunches everything together. And I've got some other things in here. I want a strong group that it's in. I want a current price over $40 per share, average volume 500,000 per day, and a relative strength line within 5% of a new high. So that's kind of your crucial thing to get price momentum going on your side. When you put all those things in, right now in the market that we're in, there are only 8 stocks that satisfy all those requirements, which is kind of interesting because we're in a very strong market, right? We're up near all-time highs. What are those stocks? Well, some of them you'll recognize. Astera Labs, maybe the best fundamental strength semiconductor company out there, and it got all kinds of good press in the last few days, and a lot of call flow going in. Robinhood Markets. Did you expect that to be on there? Well, it is. It is a market leader, and for a very good reason. And I'll tell you what, any price underneath 120 is probably a good buy and hold kind of price, because Robinhood should be, at least a little bit of Robinhood should be in your long-term portfolio, because they're just doing all the right stuff. I didn't think so. I didn't like them when they first came out. I thought they were a joke, but they've proven themselves to be very viable. Every college student, my daughter tells me this, she's in college. Every college student has a Robinhood account, and they're all trading stocks and crypto. When they're not going to the MGM to pull the slot machines. I don't know what it is about that generation. Too many games, they're playing video games. Celestica's on there. AppLovin, that's a very good software name. Credo Tech is a software company as well. Western Digital. What else is in there? Avgo, right? Your number one semiconductor, biggest of the mag semiconductor stocks is Avgo. And then a gold stock, AU. Okay, so I was able to do that. That's good. Now let's put this aside, and I will take some chart requests. So you can go ahead over in the live trading room. You can type into the trading main room just ticker symbols. Don't say anything else. One ticker symbol per person, and let's see what you are interested in. Well, Motorspud actually talks about CCJ already, so let's see what that one looks like. This is a uranium play, and I've been very bullish on some of the nuclear plays like Oklo. We were in Oklo calls. Took a nice profit in that one. We had Oklo shares before that in the live trading room. NNE is another one I like. SYM or SMR, I think is another. I've got some shares of that one, SMR. So anyway, the uranium space is good, and Trump is over in London right now talking with the Prime Minister of England about a nuclear deal. So we should see these nuclear plays do really well. And CCJ is a mining company that goes after uranium, among other things. And so, of course, uranium is a big part of the nuclear play. So now, CCJ and Oklo and NEE and a bunch of others are coming in today. They're falling back after a really good several days of upward movement. So I don't think this is a deal breaker. And if you're already long, you would just kind of want to sit through this because I think it's just some back and fill. I think it's a selling on the news, and the future prospects look really good for that sector. So I would hold. I wouldn't buy it today just yet. So if you want to look for a good place to buy, see Oklo is down a little bit, NNE is down a little bit, and what was the one I mentioned before? SMR is, I'm kind of waiting for this one to get caught up to the rest, but there's your pattern, and it did break out yesterday, and it's doing a little back and fill today. For a fresh breakout setup, this is pretty good. In fact, I'm going to put this back on my greens list. I only took it off because I bought it. Yeah, so CCJ, it's a hold. I wouldn't buy it just now, but you know what? If you missed that big run yesterday, and you're back now at the top of the range, so not a bad place. Not a bad place for a new position. I'm sure if I were to put Fibonacci retracement on this uptrend, we would see it's down here at probably the 0.5 level. That's usually a pretty good place to start nibbling on some shares in a good uptrend. Okay, BMNR. I have some of this as well. We had some calls on this that I banked a little too soon because it's up higher today. In the options room, we were in this one for a couple of weeks, and it really got some nice traction Friday last week, and then started to slip a little bit yesterday. So I said, let's just bank it, take our profits, and run. And then, of course, it's much higher today. So this is interesting, right? Ether is a weak red today. I'll call it weak because usually when it falls pretty hard, and it's only down 0.8 of a point. I'm sorry, 0.4 of a point. But BMNR is a play on Ether, so BMNR is now rallying ahead of Ether. So I like Ether. I would rather be all in Ether than in Bitcoin for the next couple of months, and nothing wrong with Bitcoin either. But I think it just has a leg down. But this is a very good way of leveraging that, and you can see that if today is any indication, this is going to rally to catch up to the valuation of the company because they've been buying Ether hand over fist. If Ether starts to get back on track, and it looks to me like it's going to very soon, the next couple of days, this one is really going to fly. So it's at 56 right now. Your first test is going to be around 70, 71. That's the pivot high right there. It gets slapped right back down again. I'm not sure what was going on with Ether. This is the potential high, right, up here around 150, 160. I don't think it's going to get up there anytime real soon because the market is clearly saying that while we approve of your business model, we don't think that you're valuing the company quite as clearly as we are. And this was just, all excitement on the initial news that they were out buying Ether, and then reality sunk in, and you don't want to get caught way up here and come all the way back down like that. But I like this. This is, I think that 70 high is going to go, right? Because you have two, it's called a scallop, right? A scallop pattern. You have two scallop bottoms, or rounded, soft rounded bottoms that are wide. That's a scallop. And one is higher than the other. And the next thing that should happen in this chart is that you get a higher high. Right? You get a higher high that takes out 70. 70 is right here. And we might go up to 80, 85. So BMNR, as far as I'm concerned, buy it today, add to a position today. Put a stop. I would put a stop below Friday's low or even below the 21 EMA. It's going to be a little wide, but that you have to do that with this. And just ride it. Just ride it up until you get stopped out. That's my advice on BMNR. PLTR. Okay, so here's a good example, by the way, of when a stock breaks the pullback trend, as it did about 3 weeks ago. It doesn't always just go zoom higher. Sometimes they do, but more often than not, they do this sideways, right? Sideways, and it's just dead money for a couple of weeks. So I was looking at PLTR during this consolidation here, thinking, okay, when is it going to break? When is it going to break? And I don't think we've traded PLTR. Correct me if I'm wrong, but I don't think we've traded it for maybe the better part of a month because of the pullback and then the sideways consolidation on breakout. Now, it is starting to make some good constructive moves. We're well above the 21. We had a big green stick, as everything was big green stick on Friday last week. We had a good day yesterday and a very little pullback today. So all this is really good. Your target is going to be up here 190, and it's only at 170. You could leverage that with some calls, or you could leverage that with PLTU, but I think it's a bullish look. To me, it's a bullish look. I'm not in PLTR at all. I'm finding too many other better opportunities out there, and I'm having too much fun trading other things. But I think you could buy it today. It's certainly a hold, and yeah, I would put my stop underneath the 21 and ride it up to 190. And when it gets to 190, I'm not so sure it's going to do much higher than that, because that's where people got really, really concerned about valuations, and I think those same concerns are going to come back to haunt it. NVIDIA, we're long NVIDIA, and yeah, it's just, here's your big gap up, like everything last week, a little bit of some back and fill, disappointing move today, losing the 21, but we are still above the 50 or right at the 50. That should hold. I think it will have a better day tomorrow on FOMC. And it's going to scare some people out, what's going on today. And it's related to some news with China. I don't know the details. I posted it in the room, but I don't remember exactly what the news thing was. But there is some concern about some restrictions from China on NVIDIA. I'm not exactly sure, but that's the thing that's happening today. It's holding back a number of the semiconductors. The ones that are rallying today, like I think LRCX is doing well, AVCO, those are the guys that are really free. They're all free of the Chinese contagion. But AMD and NVIDIA and a few others. Let me show you one that I kind of like. That SMTC. See how different this chart is compared to NVIDIA? NVIDIA's been pricing in all that China stuff, right? And I don't think, it has not broken out of it's a very soft pullback, to be fair. Very soft pullback, but it is a pullback, and we're still well under 52-week highs. But if you compare SMTC, which is a supplier to NVIDIA, one of NVIDIA's biggest customers, or is it the other way around? I never know. But it's up at 52-week highs, and it had a big power gap on earnings. That's always good. Nowhere near to closing that. That's always good. And instead of a pullback, it keeps moving higher. So I like SMTC for the relative strength it's showing, and I think that it's just going to keep banging up on new highs. NVIDIA, to me, I'm not sure I would go out there and buy it today because maybe it gets a little bit worse. But we're already long in the live trading room, NVDL, the leveraged version. If we haven't gotten stopped out, I don't think we're there yet. And I did move up our stop because we had a good day yesterday, but then some pullback today. So anyway, we'll see where that goes. But I wouldn't say it's a buy today, but it's certainly a hold. And then it is NVIDIA. So you want to be long NVIDIA in your long-term portfolio anyway. I've been in long NVIDIA for probably 8 years now. And I can't tell you, my entry price is like somewhere in the teens. So it's that kind of stock, right? You need to own it. Steele, yeah, I'll give you a screenshot of the parameters in the room. I'll do that in just a little bit. Let me do one more here, TTMI. Oh, nice. Okay, actually, this was one that I was in a while back. I played the breakout, and then I got stopped out on the little pullback here, and then, much to my chagrin, saw a big upside day tomorrow. This is a bullish chart. When you have a head and shoulders at the top of an uptrend that then breaks out to the upside, that is as bullish as it gets. And what the market is telling us here is that this line in the sand, which is about 47, is not going to get violated again. No, we had a month and a half of testing that 47, test, breakout, retest from the top side. That's good, and then big bang higher, and we're up here at now 49 and change. So where is this going to go? Well, the pattern target is 39 to 47. That's an 8-point move. 47 plus 8 is 55. So 55 up here is your target for that pattern. Doesn't mean that it's going to stop there and come back down. It just means that that's where this current move is likely to go. And, 49 to 55, you could leverage that with some calls. This is the fundamentals are good. This is an IBD leaderboard stock, and they're very conservative in their approach. Really appreciate the leaderboard service. And yeah, this is good. It's just good all around. I wish I were still in. I'm not. And okay, let's do Facebook because I like this one too. So we have Meta calls in the options room that we bought down in this little consolidation right at the 21. And we're getting some nice follow through now. We've had some really good upside in those calls. They're getting pretty close to target, in fact. And I'm still in FBL, which is the leveraged version of the ETF fund for Facebook from a previous trade we had in the live trading room. So I like both. Meta calls and FBL. I wouldn't go with calls right now because it could kind of cool off and go sideways for a couple of weeks, and then you're going to lose time value. But FBL, I think, is a buy. Your target is up here, of course, of around 7. Oh, let's do FBL. Your target, here's the breakout, right? Nice looking move. 3 good green bars in a row. Big green volume print yesterday, pushing well past the 21. 21 starting to curl higher. Fresh MACD buy signal. The big purple cycle is down near the lows after a long pullback. Yeah, this looks just great for a trade. You could buy it right now. I would put a stop below the 21 and yesterday's low, trail up from there. Your first target is going to be 52, but I don't think it's going to stop there. I think this is going to hit all-time highs. So Facebook has been a little bit on the softer side because of some potential litigation and stuff. But tomorrow is correct me if I'm wrong, tomorrow is their investor day. And Zuck is going to be talking about some new glasses, $800 price tag at the minimum. And I don't know if that's going to be good news to the market or not, but it usually is a pretty good catalyst for continued move. The fact that we're moving up into the day, into investor day, is a good sign. And Zuck usually does pretty well in those things, unlike his counterpart over at Apple, who tends to just blow it on new product reveal days. All right, guys, I'm going to let you go. God bless everybody. Have a great rest of the day. I've got an hour left of trading, and I have a few tricks up my sleeve for the rest of the day. So stay tuned. We'll see you back in the room in just a little bit. Bye for now.